Yes.
That's the earliest I can get on there and see.
People are already getting
We can see
on.
ourselves.
So I just now started the deal. So good morning. Hopefully everyone can hear me this morning. I appreciate everybody jumping on early. We've got some early risers. Thank you for that. And we're going to wait just a few more minutes and get started right at 9:01. So hold tight. Thank you. Looks like we have a lot of folks joining right here, right before 10, or right before 9 o'clock. So hold tight. We're going to get this party started. Thank you for being prompt.
Thank you, Randall.
Hey, Rennell, this is Ross in Lubbock.
Hello, Ross. How are you?
I'm well. So you see Stevens Insurance on your screen as an attender?
I do.
That's us.
Okay, great.
Yeah, just wanted you to know
Thank you
that
much.
I didn't skip the meeting. So
Very
there's
good.
going to be 4 of us here.
Okay, great. Thank you for joining.
You bet. Uh-oh, there's Mickey.
So
Man.
everyone,
I wonder who paid him to wear a pink jacket.
we're going to get this started here in just a minute or two. Thank you for being prompt.
I like to see what kind of shoes Mickey has on.
Yes.
He's putting his feet up. Look at him.
Hey, Mickey, I see your razor and my razor decided to go on a vacation.
Who said that about the razor? Gray. Hey, buddy.
How are you?
Doing good, man.
I'm just wondering who whipped you and made you wear that jacket.
Nobody. It takes a man to wear this jacket.
Yeah, but usually there's a golf tournament involved.
It's true. That's true.
So which golf tournament gives out pink jackets?
The Wisters.
Hey, Mickey.
Is that Carolyn?
Now, this is Paulette, but I think real men wear pink.
See, thank you very much, Paulette. That's exact.
We eat quiche too.
Nothing wrong with a good quiche,
Good morning, Mickey. This is Doug Rufa, but you can't see me because I'm in my shorts and I don't have advanced computer stuff, so I can see y'all, but y'all can't see me. How about that?
We're very thankful. Very thankful.
But and you can't see my shoes either, Mickey. No.
All right, ladies and gentlemen, we've got looks like 27 thus far. And I know others are going to be popping on here shortly. And so in the essence of time and your schedules and our presenters' schedules, I want to make sure that we stay on track here. And just want to say thank you for taking time out of your day to be a part of what we're doing. And as you know, in the past, we've done these things at Texas Star in Euless, and it's been a while, but hopefully that's all coming around. Things are opening up. I'm excited about that. And I know some of you have had COVID. We've all known people that have had COVID, and hoping that you and your families are doing well. And I'm glad. I didn't know anything about Zoom a little over a year ago, but glad that we have this. And although I do prefer the face-to-face, and we were just talking, Mickey and Cindy and I were talking yesterday, I like to press the flesh as a life insurance guy. You know, we make phone calls and see the people. I like to shake hands, but this will do for now. I'm always kind of batting back and forth with my wife loves to order off of Amazon. I'm more of a face-to-face kind of guy. If I'm going to buy a car, I want to kick the tires. If I mean, forget Carvana. If I want to go and touch and feel and smell. I mean, I want to get out and see the people, but we've all adapted with all this that we've had to deal with. And we've seen an uptick in e-apps, drop tickets. Some of you are doing drop tickets that swore you'd never do electronic applications on life insurance, but we're glad we have those tools. The underwriting processes, we've seen changes with all of that. You'll hear some of that today. The accelerating processes and things have become more streamlined. So that's a good thing. E-delivery for policies, all of that is as the pace is picked up. As you know, we're involved. Our focus is term, GUL, and certainly IUL and whole life too when needed. We've got Chris Simpson on a little bit later to talk about annuities, and we do life insurance and annuities. We're also involved in worksite marketing, and most of you know that I've been a cornerstone to what we've done for many years now has been Texas Life out of Waco, and we do a lot of school districts, certainly municipalities, counties, financial institutions, different types of industries. They've limited the types of industries in recent years, and the sizes of groups, minimum of 25 eligible employees. But Cincinnati Life, not to steal Benny's thunder, but we can go down to 15 lives on a guarantee issue. Worksite marketing is a tremendous additional revenue stream. And if you're not involved even in the group arena, but you have clients that are decision makers in these businesses, that's a great way to serve the underserved market. So let me know how we can be of help. But without further ado, I want to turn the program over to Benny Cromwell, our life field director for Cincinnati Life. And Benny, I'm gonna just turn it over to you and let you take it and run with it. You can share your screen. I know you're going to present PowerPoint, so take it and run with it, my friend.
Thank you, Ben. I appreciate that. Again, as he said, Benjamin Cromwell, Field Director for Cincinnati Life here in Texas. So any questions that you have during or after, please reach out to me. I'll be happy to help. I'm going to take kind of a Cliff Notes version, a macro view of Cincinnati, touch on some of the things that make us different, some of our advantages, and obviously talk about worksite, rapid accelerated underwriting. So I'm going to share my screen here. And okay, can everybody see that?
Mm-hmm.
All right, here we go. Have to get the legal out of the way, disclosures. If you don't know anything about us, everything you ever wanted to know. What you'll find with Cincinnati, again, if you're not familiar, direct access to anybody, including your underwriter. So if you have a question, clients telling you they're taking 10 milligrams of something you don't know, is that the equivalent of a baby aspirin, or could this be a possible decline? Pick up the phone. You'll always get a live person. You may not always get your underwriter, but you'll get a live underwriter, and you'll find out whether we're going to be a dog in that hunt or not.
So there's Robert Gomiski, but what, I'm not showing my.
Are you not seeing it? Is that what you're saying? Robert, you okay?
Go ahead and continue on.
Okay, thank you. Actual age. So you may have us say, when you tell us he's 42, well, what's his date of birth? Because we're actual age. And then a built-in underwriting niche would be our stance on tobacco, which we only view cigarettes as tobacco. Now, inside of that is going to be the patch, the gum, and the vape. But everything else is considered non-tobacco with us. Top 10 reasons. As you can see, the electronic application as well as the drop ticket. If you haven't tried drop ticket, I encourage you to give it a shot. Give me a call. I'll be happy to go over it with you. But with Cincinnati, if you drop a ticket and it's very little information, so it's a low hurdle, very little information required of the client, our fulfillment team, our in-house fulfillment team will reach out to the client to complete the application. They may qualify for accelerated underwriting. If not, the nurse will contact them and they'll set up their labs for blood and urine. With Cincinnati, we have Main Street products. We're not trying to be anything that we're not. We're just trying to be really good at what we do, make it easy to do business by basically, like Reynolds started, he wants to see the car. You will always get a live person with Cincinnati. You're never going to get, when you call in, press star, press pound, leave a message. You'll always get a live person. So our products that we have, it's a very easy story to tell to your clients or any of your down the line producers that you may have in your agency. You can see we go down to 25,000. That may or may not be something, but it's there if you need it. You'll never be embarrassed by our rates when you ask for rates. I mean, when you ask for quotes, 10 through 30 year, convertible. We pay commission on the policy fee, and that's $75. So maybe want to remember that little nugget. If you're not familiar with return of premium, this is one that I would strongly encourage you to start asking your clients about, because it's the old closed-end question. Would you buy life insurance that paid it all back to you should you outlive it? It's more advantageous in the younger ages because these folks have a pretty good realistic idea they're going to outlive the coverage. So at the end of 20, 25, 30 years with ordinary term, what are their options? And we'll go over that in detail. I've got a case study here I want to go over. On the marketing opportunities, we're seeing roughly 62% of all of our key person coverage coming in going ROP. And what firms are understanding and seeing is they're paying a little bit more than they would for ordinary term, but they're not paying what they would on a permanent coverage, $7,500 give or take. Because the options they have, should that key person leave, the firm can recoup monies back, versus an ordinary term, there's no real option. So you can also see how it can be used in buy-sell funding, golden handcuffs, young insureds, as we just talked about. Want to go through a quick, can everybody see this where it's highlighted?
Yes, sir.
Okay, thank you. We're going to pick on a 45-year-old for $1 million of coverage. Should anything happen to him, he's married, 2 kids, mortgage. Should anything happen, it would be a catastrophic event in his household. So he has $1 million at age 45, year 1. The 2 columns here represent policy value, means the return of the premium. And you can see the amortization schedule going down. And what $77,600 represents, 20 years of premium that he paid us. At the end of the 20 years, we give it all back to him. It's not a taxable event because there's no gain in the contract. He can do with it what he wants. The other column, paid up insurance, says if something were to happen and he needed to stop coverage, let's say right here, year 10, loses his job, gives you a call, says, Reynolds, I lost my job. Man, I'm sorry to hear that. Because the first thing people stop paying, insurance. First line of coverage they stop paying, life insurance. Reynolds looks in his agency management system and sees back in 21, he put his client with Cincinnati. He says, well, you know what? I've got good news for you. I can get you $20,486. And for someone who just lost their job, that's real good news. But he tells Reynolds, you know, I've got the 2 kids. If something were to happen, I need something for them and for my wife. Okay, take it as a reduced paid up. So the $1 million is reduced down to 57,000. That's his new death benefit, but it's paid up. That coverage stays in force until he turns 100. So what he paid a little bit more back in 21, he had the options that we talked about, but he also has an option maybe he never thought about. Year 10, there's a catastrophic event. You can get $20,486 for your client, or he has a new death benefit of 57,000, but it's paid up, stays in force until he turns 100. As we talked about, you can see this is when he gets all of it back, 100%. And these are the numbers that reflect that. Those are his options. What we're seeing is more and more people that come to you in 21 and they need a plan, they need life insurance as a foundation in case they don't make it. They want to retire at 65, but in case they don't make it, here's $1 million of coverage. What we're seeing is folks are crossing the finish line early. What we mean by that is, say age 62, 63, kids are grown, they're out of the house, they're on their own. Husband and wife don't have any real debt. Call Reynolds up and say, we're really good. We don't need this life insurance anymore. We've made it. Reynolds looks in his management system and says, wait a minute, tell you what, you have $63,135 or $135,000 as reduced paid up. Tell you what, have Cincinnati cut you a check for $53,135. Do with it what you want. That's your money. You can go on vacation. You can remodel the house. Maybe you sign on your kids' college loans. Maybe you're like me, you have 2 daughters, so you have 2 weddings to pay for. That's your money. And again, it's not a taxable event because there's no gain in the contract. Do with it what you want. That remaining $10,000, see what that'll buy in a single premium because it's guaranteed conversion to the permanent product. That's your final expense policy, and you, the agent, get paid full commission on the conversion. So that is why I'm strongly encouraging you to look at return of premium for the options. And especially if you have some of the younger folks that are dippers, chewers, I think you'll find some instant traction with us because of our stance on tobacco with this product, because the benefits, the options that we just talked about. Any questions on that? Okay, give me just a second. As I mentioned before, roughly 62% of all of our key employee or key person applications are coming in on an ROP basis. And here's a case study that you can leave with the client to let them see how it would work. And you can put in right here your personal agency agent information so you can personalize this. These are free. They're on the website. Give me a call if you'd like me to send these to you, or if you're already on the website with username and password, you can find these. And again, like we talked about, if we take this and instead of being a civilian contract, we make this a business contract. 45-year-old, worked his way up. He's a key person. 10 years from now, that key person decides he's going to do it on his own. Maybe he relocates. Maybe he just quits. Now, if you put him with an ordinary term, what options do you have? Very few. You didn't want to pay the $7,500, which would probably be about what a whole life, a permanent product UL would be. So you put him here. The firm is willing to pay because they realize if that key person 10 years down the road walks out for whatever reason, they can recoup a little over 50% of the monies paid out. Firms are willing to pay a little bit more versus term for these options. That's why we're seeing more and more of our key person policies come in on the ROP. Any questions on that?
Yeah, Ben, Dennis Wells, can you hear me?
Yes.
So what would be the price differential between a regular 20, 30-year term versus a return of premium term for the same?
There's not a built-in, each sale would be different, but in this situation, I think the ordinary term was like 2,100 on this one. Each sale is different. So obviously the younger, you won't see as big a price difference. The older, you'll see a little more noticeable difference. But again, what you're trying to get your client to do is just see the options. And at the end of the day, worst case scenario, they buy a 20-year term.
Yeah, okay.
And I'm sorry, did you say actually, I know dippers, and this is Doug here in Sugar Land, that dippers and chewers are actually non-tobacco. Did you say cigar smokers are also non-tobacco?
Correct.
Oh, awesome.
Yeah, and we'll show a few slides down. We'll kind of delineate that. But no, dippers and chewers, most carriers and cigar folks, pipe, most
Yeah.
carriers throw them over the fence. The best you're going to get is a standard rate.
Yes.
Us, we have 3 preferred rates. It's a real good chance you will qualify, assuming height and weight, family history is all within normal limits. You don't have to be super preferred
Right.
and
Thank
be a dipper. Does that make sense?
Yes, sir. Thank you.
Okay,
Can you
and
hear
go ahead.
I'm Jake in Lubbock.
Hi, Jake.
Will you be covering the application on Keyman Insurance if a corporation is the owner of that policy?
Will I be covering it?
Yes.
Jake, I don't understand what you mean by will I be covering it?
Well, I just wrote a company, 3 owners of a company, a Keyman Insurance with a different carrier. On the application, the owner had to be one of the owners, one of the partners. I've also wrote one with Cincinnati Life, and I like to change it now to this type of plan, but I need to know if on the ownership, how that's going to be handled, as far as if a partner needs to be the one of the assignees as owner, well, the insured will of course sign as the
Proposed insured.
proposed insured.
Jake, it depends on the structure of the perpetuation plan, but if it's a cross purchase, entity purchase, and there's multiple partners, you generally want a cross signature. So of the 3 partners, you have a proposed insured, one of the other 2, assuming they have equity, would sign as owner, and they would just
Okay,
rotate that with the 3 policies.
got you. I know what to do now. Thank you.
Okay. Here is our GUL, Life Setter Universal Life, your permanent term. As you all know, if you've been in this business a while, I got in it in '94 when I got out of college, and I was with another carrier, a life company, and we were able to provide software to agents where they could put in their own rate of return. And some folks were putting in 12%, 15%, and that just wasn't going to happen. So we now have GUL. With our secondary guarantee, very simple. What you see is what you get. We'll go out to 121. You can short rate this if you want. It's a flexible. You can have it run to age 90. You can have it run for 5 years, 12 years. You can dial it in as you see fit. Again, what people are looking for generally when they're looking for this product, they want to go through underwriting one time, and they don't want to worry about rates of return, cash value. Will this thing cannibalize itself in 7 years? And I'm going to get a note from Cincinnati that says, send us $100 in the next 90 days, or this lapses. They don't want to go through that. If they went through that in the 80s, 90s, they don't want to go through that again. This is the product they're looking for. Go through underwriting one time. It'll be there. Should you make it to 100, coverage is free to 121. That takes care of a lot of people. I would say the majority of our permanent business comes via the Life Setter Flex or our whole life, and we'll get to that in a second. But I know Reynolds wanted to talk about it, and he does a good job of marketing our GUL. And as you can see, here's just a sample quote. But this death benefit will be here with your client for the full term. Heritage is our traditional accumulator product. Again, we go down to 35,000. If your client wants this, I hope it's funded properly. I would encourage you to lean heavily on the guaranteed side. As we know, reality is generally somewhere between non-guaranteed and guaranteed, but make sure that your client understands they're working without a safety net. But generally when you have a client that's looking for an accumulator product, they're looking to max fund it or create like a Section 162 plan, something like that. And it's a good product. It's a real good product. And we see a lot of these kind of plans come in, split dollar, deferred comp, et cetera, on our traditional UL product. Guaranteed whole life, ours is a non-par, so non-participating. We don't pay dividends, which means every moving piece is guaranteed.
I have a question. This is Ray.
All right.
Do it. Hi. On the split dollar, who do you use for your record keeping or administrating?
We're not going to do any record keeping on that, but we have advanced sales department that would be involved on that. But when it's a split dollar arrangement, and we don't give tax advice, as you know, but we do have resources available for free if they wanted to utilize a tax attorney. We have those guys on staff. But once this plan is agreed upon, it's going to be the client and their CPA, tax attorney, CFO, whatever it might be, in a split dollar.
Okay, I want to ask your opinion on the split dollar. Do you think it will still be a good deal when, if this present administration raises the taxes? It raised it back up to 39. And they raised the corporate rate to 28.
I understand what you're asking, Mr. Ray. Like they say, the two things to never talk about, religion and politics. But I think that
but those two things affect our life more than anything.
Correct. Especially, and people come to you looking for advice, Ray, before the rates go through the roof, what do I do? I think what you'll see is the industry will be creative, but if it's a good fit and it makes sense, and for us, like I said, if you're looking to fund it properly, then the traditional accumulator product, you really don't have an issue. But in the split dollar arrangement with what may or may not come, because we don't know. I agree with you. I think it trends that way. The news coming out of DC seems to indicate they're going to raise rates, capital gains, et cetera. But I really can't say on the record, Ray.
Okay.
But if you want to talk offline, I'd love to talk with you offline after this.
Yeah, Benny, just so you know, we've got, and these have been great questions. That's probably even better than the presentation, but we've got about 5 minutes or a little bit less.
Okay, thank you. What I love about our whole life, guaranteed, all moving pieces. So it doesn't matter, and it's non-par. So it doesn't matter who's in the White House, what the prime rate is. All moving pieces are guaranteed by contract. And as you can see, again, there's options in case a client has a catastrophic moment right there, but all moving pieces. You look here in year 17, that's going to be the cash value guaranteed by contract. Worksite. Want you to look at it a different way of creating a profit center, not just, oh, that's voluntary. Well, that's like dental. No, it's not. This is something where people wake up every day, especially over the last year, they would wake up every day and being told they're going to die when they go on social media, when they look at the newspaper, when they look at the news. Our job was done because now people wanted it. We didn't have to create it. We didn't have to paint a picture, the emotional sale, as they say with life. It was done. We needed to make it easy for people to get coverage. And that's where Worksite comes in. With ours, it's guaranteed issue. If you can see everybody, that's the linchpin. As long as you can see everybody. So the old mandatory to talk to me, optional to buy. We know people are going to walk in and go, I just don't want it. I'm good. Okay, sign the waiver that it was offered, but you decline coverage, that's fine. And then move to the next person. Okay. And I'm going to try to speed this up. And if you guys want to talk in detail, please give me a call afterwards. We look for 15 or more employees, W-2 or 1099, as long as there's common billing, meaning we want to send one list bill every month. We don't want to send 5 or 6. Okay. It's the employee's policy. Now we say we're going to have a group meeting, group presentation. We're going to enroll. It's going to be on a list bill, but it's an individual product. So if they leave for whatever reason, the only difference to them is they would pay us directly. Benefit does not go down. Price does not go up. There's no paperwork. It's simply pay us direct. That's the only difference, okay? You can see, like, as Reynold mentioned, school districts, healthcare, and that's a big umbrella. Hospice, old folks homes, et cetera, manufacturing, and a lot of gray blue collar, meaning people that aren't going to call you up and say, run me a 20-year term quote for 100,000 to set up my labs. But if we show up to where you work and say, sign here, you're covered, and it's your policy, you're not going to have to do anything. I mean, there's no blood, no urine, nothing. We also have one thing that I think sets us apart in the worksite arena is we have ROP. As we looked at earlier, we have that same product available on the worksite. So when you're in the school districts, when you're in the home healthcare, when you have younger folks, they can pay for 20 years and at the end get all their money back or take it as a reduced paid up. That again will set us apart from most folks. I'm going to kind of skip to this. Annuities, 2 annuities, flexible single, return of premium. And what this means is, should they cancel inside the surrender period, we give it all back. We take the haircut out of the interest, not the total account value. Okay. So 2 years from now, they cancel. We're only taking the haircut out of the interest, not the total account value. Tobacco, like I said, all of these guys, non-smoking. And you can see that you guys are in the wood.
About 1 minute, Benny.
Okay, so you can see it there. I was going to touch on some things that I see a lot of people miss. Cover letter, if it's a case that needs some explaining, go ahead and type a quick cover letter. We have boilerplates available to you. Letting your client know what's next, because we get this a lot. I didn't know. And we have this that you can leave with them, whether it's a PDF or hard copy. Marijuana users, you can see, we're looking for the older folks. And if they're doing it these times, this is most likely what they're going to get. This is a growing industry. Advanced markets. Any questions? Give me a call. Thank you, Reynold.
Thank you, Benny. As you're stopping the share on your screen, I'll make a brief introduction for our next presenter. And again, questions and answers, we can handle that on the back end. If everybody can just hold tight, and then we may have opportunity towards the end. And we can always do this via email as well. But Carlin Snipes, many of you met Carlin a couple of years ago at Texas Star. She's the field vice president with Pacific Life. And at this time, I'm going to turn the program over to Carlin. Thanks, Carlin, for being here with us.
Thank you, Ronald. Thank you for having me this morning. Hope everybody's doing well. I just want to talk a little bit about a program that we're going to be launching May 17th is the launch date. It's called PL Swift Sailing. It's going to be an accelerated underwriting program that I'm really, really excited about. There's a couple of tools that are coming out with this program I'm going to highlight during the presentation today, but I think you guys are going to really like this program. Let me see if I can change my screen now. Okay, so what I want to do is just give you an introduction of Swift Sailing. This is going to be our new accelerated underwriting program launching tentatively May 17th. I'll give you an underwriting comparison of the differences between that program and some of our other programs. Just give you the ins and outs of how it's going to work, highlight a couple of tools and resources that are available to you, and then answer any questions that you might have. So let's talk about Swift Sailing. So we are late to the game, I would say, with this, but one of the things that we've learned from that is we actually went out and researched and got a lot of information about what you guys liked and did not like about programs that are available to you. And so we wanted to take those lessons and incorporate it into our program to make it more competitive against the other carriers. So what Swift Sailing provides to you is an underwriting process that there will be no medical exam, no blood draw, no bodily fluids, or an APS required, assuming the client qualifies for Swift Sailing. What you're going to see as I highlight this throughout the presentation, ours is going to be a little bit different than what you've seen with other carriers. There's going to be broader eligibility for the clients out there. We're going to have an improved decision time, so you're going to get an answer a lot quicker than you are with traditional underwriting. And throughout the process, we'll keep you current status updated about what's happening with the client, where they're at in the process. One of the things we really found that a lot of customers complained about with other accelerated programs were they'd get the answer, but they didn't know why they got the answer that they did on a case. So we're going to be really transparent. So if we tell you the client doesn't qualify, we're going to tell you exactly why they don't qualify for the accelerated underwriting program. So what you're going to see with ARC, as I mentioned, it's going to be broader. So ours goes up to $2 million in face, whereas a lot of carriers out there that have accelerated underwriting programs cap it off at $1 million. So ours goes up to $2 million. It's going to be available up to ages 60. At launch, we're going to only launch it on our term policy, so it'll be available for clients age 18 to 60. Another thing that's different with our program than what you're seeing out there with other carriers' programs, this is going to go out to standard or better rates. A lot of other carriers only offer it for preferred rates, so we actually offer it for standard or better. That includes nicotine and non-nicotine. At launch, it'll only be available if you're using one of our electronic ticket processes. So that's the only way you can get into Swift Sailing is by dropping a ticket. You cannot do a long application. And as I mentioned at launch, it'll only be available for our term product. Down the road, we're going to actually launch this with our GL product as well, but at launch, it'll only be available with the term product. So if you're not using drop ticket, definitely talk to Reynold and Mickey about it. It's something that's the only way you're going to be able to access this program. So you want to get set up to use those drop tickets. So one of the things we also developed with this program is a pre-qualifying checklist. If you use this checklist, you'll know out the gate if the client's going to qualify for our program or not. So I highly recommend that you use this checklist with every one of your cases. So you're setting expectations with your client. You're not saying, oh, you're going to qualify for accelerated underwriting. And in fact, they're not going to qualify by looking at this list. So definitely make sure you're looking at this pre-qualification checklist with your clients. What we're going to come, which right now we're in a pilot process with this program. The official launch is going to be May 17th, as I mentioned. What's going to launch at the same time is an online health history. And I'm really, really excited about this. This is going to be an opportunity so the client does not have to do a telephone interview with one of our fulfillment providers. They can actually go online and complete that information on this online health history. And that's going to be really convenient for your clients, I think. It's going to happen within minutes. So say you drop a ticket on a consumer, within minutes, they're going to get an electronic email that says, hey, complete this online health history. So I think that's going to really change the game. It's a shorter process. It's about 20 to 30 minutes, where our normal telephone interview process takes about 45 minutes to an hour, depending on what kind of impairments the client has. So it's a much shorter process, less reflexive questions for the client to go through. They can complete at their convenience, which I think is huge. They don't have to go in and schedule this with a telephone interview. They don't have to go and schedule it at their, whatever works for that exam one provider. They can do it at their convenience. Now, we will send reminder emails to the clients if they haven't completed that online health history, just reminding them to go out there and complete that history. If they don't complete the online health history, we'll come back to them within 7 days and say, we need you to complete, hold on one second. That's okay. Sorry, guys. I have some painters here and it was getting loud. I don't know if you could hear it or not. So I'm going to ask them to go downstairs. At the end of 7 days, if they haven't completed that online health history, what we'll do is we'll start the telephone interview process with them. We'll start reaching out to them to see if they'll complete a telephone interview. So as I mentioned earlier, we want to make sure that we have a very transparent process with you. So we want to make it very predictable. So what's going to happen if the client is doing the online health history, most of the time we'll know before they complete that history if they qualify for accelerated underwriting or not. If they do not qualify during that online health history, what's going to happen is we're going to say we need to set up a paramedical exam. So it's going to be a seamless process for the consumer. They're not going to submit this and us come back later and say, oh, you don't qualify. We're going to have to get an exam set up. Now, the only time that will happen, if there's a chance that the client could still qualify for accelerated underwriting, we're going to send it to the underwriter for them to take a look at to make sure before we kick anybody out of this program, if there's a potential that they could qualify, we want to review it and make sure it's a yes, no situation at that point in time. So that's the only time you're going to see that. But I still think that's a good thing for the consumer because they could potentially qualify for the program. And if we let the system automatically kick them out every single time, they're going to lose that opportunity. So I think that's a nice thing. We'll share every single time when they're kicked out. We'll share exactly why they didn't qualify for accelerated underwriting. We'll tell you that. And if they don't get preferred best no nicotine, we'll make sure you know the reasons why they did not get preferred best, all the top reasons why they did not get it. And as I mentioned, we'll make sure we're notifying you throughout the process of where the client's at and what's happening with the situation. Now at the bottom there, we do have a smooth sailing underwriting program. I'm not sure if you're all familiar with it, But what I want you to know about it is if somebody's dropping a ticket on a consumer, we're going down the accelerated process. They don't qualify for the accelerated process, but based on their age and the face amount, they could potentially qualify for smooth sailing, which is another one of our underwriting programs. We'll automatically assess them to see if they can qualify for that before we move them over to full traditional underwriting. In the next couple of slides, I'll give you more information about what smooth sailing is if you're not familiar with it. So let me do an underwriting comparison between swift sailing and smooth sailing. I don't know if you're catching the theme here with sailing. So what are the differences between these two programs? So with swift sailing, it's a fully accelerated underwriting offering. There's no paramedical exam. There's no APS required. It's for ages 18 to 60, up to $2 million in face amount for standard or better rate class risk, nicotine or non-nicotine users. It's only going to be available at launch via the electronic ticket process. And we're using, what the underwriters are doing with this accelerated underwriting process is using data sources to make the decision quickly. So at launch, we're hoping to be right around 4 to 7 days making a decision on these cases. What I have been seeing during the pilot is we're turning around and making an offer on some of these cases as quick as 2 days. So more to come on that. And that will improve over time because initially what we're doing is every one of these cases, even though we're going down that accelerated underwriting path, every one of the cases is going to be touched by an underwriter just to make sure the system is doing what it's supposed to be doing. Now, what is smooth sailing? Smooth sailing is our fluidless underwriting program. It is not an accelerated program. We've had it for probably over 3 years, and it became really, really popular last year because it offered clients the ability to apply for life insurance without providing fluids. So they didn't have to have anybody come to their house. They didn't have to go to a Quest Diagnosis Center to give fluids. So that was very appealing during COVID to say, okay, I don't have to be involved with any other person to fulfill this requirement. It's available for ages 50 to 69, and that is age nearest. So if you have a client that's 49 and a half, we would consider them 50, and they could potentially qualify for smooth sailing. If you have a client that's 69 and a half, we would consider them 70, and they would not be able to save age to qualify for an underwriting program. So that's really important that we use age nearest for those. So number one requirement for smooth sailing is age 50 to 69. This program goes up to $1 million in coverage, and that's in force or applied for with Pacific Life. So if you have a client that has a $500,000 term case with us today, and they're interested in increasing that coverage with a permanent product like a GUL, they could come in potentially up to $1 million, so they could apply for 500,000 GUL under smooth sailing. So it just gives them another opportunity with that program. The third requirement, so number one requirement is age. Number two requirement is face amount. The third one and the most important one is the client has to have had a physical with blood work with their doctor in the past 18 months. If they meet those three requirements, they qualify for smooth sailing, and we will not require a paramedical exam. We will go after their APS though. So it's not an accelerated program because we're still going after their APS and doing traditional underwriting. Now, this pass-through rate with this program is about 90%, 90, 91%. It's very, very high. The number one reason those 10% of the people don't qualify is that blood work with the physical. The consumer is just misremembering time and place. And what I mean by that is they tell you, yeah, I went to my doctor and had blood work done in the past 18 months. Well, in fact, it was 2 years ago they went to their doctor. Or they say, yeah, I went to my doctor and had blood work done 6 months ago. They did go to their doctor 6 months ago, but they didn't have any blood work done. So it's just a matter of the client just misremembering what happened or what took place at the timing of that doctor's visit. Today, this program is available out to table 4. And you see that asterisk out there? The reason it's only to table 4 is due to our COVID guidelines. Today, we're not taking any clients beyond a table 4. Once we get out of those COVID guidelines, this actually goes out to table 16. So just keep that in mind. But as of today, it's for table 4. Now you can access smooth sailing either with an electronic ticket or a paper application. So you can go either way with this program. And we do use that traditional underwriting. So we're basing our decision on the APS. So those are the differences between these two programs, the major differences. So I mentioned this program has been around for about 3 years, the smooth sailing program. We have over 16,000 policies on the books with this program. And as I mentioned, 90% pass-through rate. So it's very, very high pass-through rate. I didn't mention our goal with swift sailing. It doesn't say it on the slide, but our goal with swift sailing is to be at a 40% pass-through rate. And what we found with most carriers with accelerated underwriting programs, their pass-through rate is right around 30%. So we want to be at 40% with our program. So I just want to highlight a couple of our underwriting sweet spots that you might not be familiar with. Our number one underwriting sweet spot is build. I'm 5'7", I could weigh 195 pounds and be preferred best. So if you have a build issue, you should definitely be taking a look at us through standard. We're extremely competitive with build. Now, if I have a build problem, then I might also have a cholesterol problem. So with total cholesterol, we can do preferred from 150 all the way up to 300 for total cholesterol numbers. I will give you a little note there, though. I think we're a little conservative on females for HDL ratio when it comes to cholesterol. Blood pressure, we're very competitive there. Depression and anxiety, if it's mild depression, they're going to their regular doctor and getting prescribed for antidepressants. They're not going to a psychiatrist or a psychologist. They can get preferred best with us. Sleep apnea is another good one that kind of ties into build sometimes. Very competitive with sleep apnea. You can get preferred best, assuming the client is fully compliant. They're using their CPAP on a regular basis and it's documented. And the last one I'll point out here is aviation. So if you have a situation where you have a private pilot who's instrument flight rated, flying up to 150 hours annually for pleasure only, they can get preferred with us with no flat extra. A lot of carriers will give you a flat extra on that one. And I'll also highlight military individuals. We do not have any restrictions when it comes to military. They could be getting ready to be actively deployed somewhere. As long as the paperwork is done while they're on the US soil, they're not going to be penalized because they're active in the military. What we will do is consider what their job is in the military. So obviously, if they're a pilot, that comes into play when they're underwriting someone in the military. So let's talk a little bit more about the ropes of Swift Sailing. So this just gives you a high level map to show you how it's going to work when you drop a ticket. So initially you drop the ticket. It's going to go two different paths at this point. They don't have it on here because at Pilot, we haven't launched the online health history, but at launch on May 17th, you can do a telephone interview. The client can do a telephone interview, or they'll be able to do the online health history. So it depends on which way the client wants to go. Then what we're going to do is, go out to our data sources to see, does this client qualify for Swift Sailing? Based on the information that we can pull, RX history, prescription, all that kind of jazz. We're going to look at that to see, do they qualify for accelerated underwriting? If they don't, what's going to happen is they're going to drop down. If they're between the ages of 50 and 60, because remember with Swift Sailing, you can qualify up to 60 with Swift Sailing. If they're between the ages of 50 and 60, we're going to look at them to see if they qualify for the Smooth Sailing program, which is no fluids, but we're still going after that APS. If they do qualify, we're going to go ahead and order the APS at that point in time. If they do not qualify for Smooth Sailing, what's going to happen is we're going to set up an order for the labs and the exam at that time. And then once we have all the requirements, assuming they don't qualify for Swift Sailing or Smooth Sailing, we're going to go through the normal traditional underwriting path, look at the client, make a decision. And if you're set up for e-delivery, we'll go ahead and electronically e-deliver that policy to the consumer. It's so funny with Zoom, I have to move your faces around so I can see my page. The page takes over my whole entire laptop. So with Smooth Sailing, initially all decisions will be reviewed by our underwriters, as I mentioned earlier. That's why we're going to have that about 4 to 7 day turnaround. That will go down over time because as we validate the system's working the way it's supposed to, we'll go ahead and do less and less of that because we're going to let that automated system take over. The decisions are generated via the model today. That's what we're going to be using for Swift Sailing. And as I mentioned, the front end, we're going to make sure you know what the adverse reasons were if they don't qualify for the accelerated program. We're going to give you that list of information. So some future enhancements, and I've already mentioned the online health history. That's going to be branded About Me. I'm really, really excited about this because this is a very much a convenience thing for the consumer where they don't have to set up that telephone interview to complete that part 1. We're already launched. I don't know why they have on future enhancements. We've already launched the telephone interview process with our pilot firm. So that's definitely going to be available at launch for you guys. Our call centers will start using a version of online health history for telephone interviews. And why that's important, if the consumer prefers to do a telephone interview in the future, that's going to actually shorten that process. As I mentioned, it could be 45 minutes to an hour, but the online health history is much shorter. We're going to kind of introduce that process into the telephone interview to shorten that conversation with the consumer. I mentioned we will be giving you an instant decision. And what that means is during that online health history or during that telephone interview, the majority of the time we're going to know before that call or that interview is complete, we're going to know the client qualifies or they do not qualify. We're also going to expand the preference on the profile preference for our distributors like you. and will gain the ability for more or less than the current ticket within the online health history and the telephone interview. Again, they're going to shorten that process. As they do more and more learnings from the online health history, they're going to make more and more improvements to that telephone interview process. And something I think I'm pretty excited about, if we get to that point, we're actually going to introduce texting of notifications versus emails. I don't know about you. Do you respond to texting quicker than you do an email? I know I do. I'll immediately look at that text, whereas an email, it takes me a little bit longer to get to. So that's pretty exciting. Texting to you, texting to the consumer. So I mentioned I'm going to talk a little bit about tools and resources that are available with this program. Let me move y'all around a little bit, see if I can shrink it down. There we go. So we're going to introduce, we do have a lot of digital capabilities. If you're not aware of it, more is coming today, as I mentioned, with that online health history, but we do have that drop ticket capability, and that will be the only way for you to access the Swift Sailing program when it launches on May 17th. If you're not familiar with Producer Bay, I recommend you go out and check out our website. It gives a lot of information about all of your pending business as well as your in-force business. It provides status updates, and it helps you prioritize pending cases, the ones that you can actually move on down the line. We do have something called e-express requirements that's available for you on our Producer Bay website. These are requirements that you can fulfill electronically quicker. An example would be a replacement form. If you do a replacement form, we would have to mail it to you to complete, and you have to mail it. It goes to the client and it comes back to us. It could take 2 weeks. With e-express requirements, we can fulfill that requirement in an hour, because what we're doing is electronically emailing it to you for you to do your part, and then it automatically goes from you to the consumer for them to do their part. It's a very, very slick process. And if you go on Producer Bay and look at one of your cases, you can actually look to see if any of your cases have the ability to fulfill a requirement electronically like that. As I mentioned earlier, we do have e-policy delivery, digital signature, payment, and delivery of insurance policy. So from beginning to end, you can do the drop ticket, you do Swift Sailing, no fluids, no APS, and then you can fulfill the policy, have it emailed directly to the consumer to complete. And there's no, you don't ever have to be in front of the consumer. There's no touch process. So if they're concerned about COVID, it's a really good opportunity to say, okay, I can fulfill this entire process electronically with you. On Producer Bay, we do have performance tools that you can use, which monitor and manage your business. And you can look at Producer Bay on any device. You don't have to do it on a computer. You can do it on a laptop. You can do it, you can do it on an iPad. You can do it on your phone. And we do have in-force management out there that allows you to mine your book of business. And I think this is important. If you've sold any of our term policies, you definitely should be looking at our conversion as a solution, having a policy review with your clients to talk about conversion opportunities. We have a program that's called an early term conversion that allows us to pay you up to 150% of your normal compensation if you complete an early term conversion. So it's definitely something worth your while to look into, to talk about, and have a conversation with the consumer if they have the PL Promise term product today. So here are some of the tools that are going to be available. We will have brochures, obviously, on the program for you to use with your consumers. We'll have brochures for you to use, just for fact sheet. The number one thing I think you're going to want to use is that pre-qualification checklist to really validate if the consumer qualifies for accelerated underwriting or not. We're going to look, even if you don't propose that to the client, we're going to look at any case that you submit with a client 60 and below that could potentially qualify for accelerated underwriting. And if they don't, then we'll obviously move them to either smooth sailing or the traditional path. But it might be a win for you if you don't propose accelerated underwriting and they qualify for it, and then they get the policy within 4 to 7 days. So it's a huge process there, a time save for you, excuse me. We do have personalized email campaigns that you can use, as well as a webinar, sales presentation, signature taglines, and we do that underwriting comparison and sweet spot piece that you can talk to. And there will be comprehensive toolkits available to market smooth sailing. So just a little bit about Pacific Life. If you're not familiar with Pacific Life, if you've never seen the whale jump out of the water, I know if you watch any college football, you see the whale jump out of the water all the time in college football, but Pacific Life has been around for 150 years, over 150 years, excuse me. One thing I didn't know when I came over to Pacific Life, and I was very, very happy to find out, Pacific Life is a mutual company. So they're focused on the best interests of their policyholders. And in today's environment with carriers making all kinds of changes to their product suites and things like that, I think it's really important to be representing a company that takes the policyholders' interest first. I worked for a stock company for years, and we would have earnings calls, every quarter, and it would change the way we're going to sail because we have to increase shareholder value. We don't do that with Pacific Life. We're focused on our policyholders and doing the best that we can for our policyholders. We do have a lot of innovation and best-in-class service, and we're stay focused on that because we want to continue to develop e-capabilities and things to make the process faster for you as well as your clients. So we're going to continue to focus on technology improvements across the board. And as I mentioned earlier, we do have that end-to-end e-capabilities from beginning all the way to the end of the process that you can do everything electronically with our policies. One of the other things I'll point out on this page, that bottom the bottom right-hand side, this is the 3rd year in a row we've been voted one of the world's most ethical companies. And that's across 75 different industries. It's not just life insurance. And as I recall, when I looked out there and to see, there was only 3 or 4 insurance carriers that were even on the list. And 2 of those were property and casualty companies. They weren't life insurance companies. So we're very, very proud of that. Just lastly, this is the sales team. My boss over there on the left-hand side is Brian Bulakaitis. I've got Michelle Kasoy. She works on the West Coast. I'm in the middle. I work in the Southeast. And then Rob Bish works in the Northeast. And we partner with Ivy Knoll as well as Debbie Bronin to help you. What I would normally say when I used to give this presentation a lot, I would say, that's my cell phone number. You need to call it because I'm never at home, which is not true anymore. I haven't left my house in forever, it seems. So, but that is my cell phone number and my email address. If you need anything, I'll be happy to help. And if you have any questions, I'll be happy to help with that as well. So with that, I know we've got a few minutes left. Are there any questions?
Can you hear me?
Yes, I can.
Company A, an individual buys a life insurance with blood work and it's been issued. Company B, Pacific Life, we want to increase the life insurance on him. Would you be able to use the blood work that was done maybe within 6 months or 3 months?
Yes, actually, I think they actually, and I can confirm it for you and get Reynolds, send it out to everybody, but I believe they actually increased it up to 12 months.
Okay.
6 months for sure, but I believe they actually increased it up to 12 months.
Thank you.
Mm-hmm.
Great. Thank you. Thank you so much, Carlin.
Oh, you're welcome.
Great presentation. Appreciate you being a part of our program.
Well, thank you guys for including me. You have a great day.
Have a great day. All right. So as the screen is transitioning, I'll make an introduction to the man who really doesn't need an introduction, the man with the pink jacket. But all of you have worked so closely with Mickey now for, well, going back to since 2008, Mickey, when you came on here, and he doesn't really need an introduction, but I would term him as marketing director extraordinaire. Does a great job. So turn it over to you, Mickey.
Thank you, Reynolds. I hope you guys have enjoyed it and felt like this was time well spent so far. And hang in there, because after me here in just, I'm only going to take 3, 4, or 5 minutes. North American will come up with Gary Proco, and that's well worth your time. So the goal here today is to help you feel more connected with what's going on in the industry, and here's some things that'll help you in your practice do a better job for your clients. I know that's important to everybody, but a couple of things that I want to touch base on today that I think is real important. One of them, Doug, are you still on there?
I am indeed, yes.
Hey, buddy. Well, Doug and I came across something yesterday that I want to bring up to everybody. It's best to use and abuse me as best you can for underwriting scenarios. You know, what I'm trying to bring to the table always is when you bring a scenario to me, that I do the best job possible finding the best answer for your clients. I just lost my screen. Can y'all still hear me?
Yes.
Yes. Okay. Well, as long as you can still hear me, I guess we're good to go.
We still see you too.
Yes.
Okay. All right. But use me for that, because it doesn't matter whether you're using iPipeline or our website, or, you know, the X-ray, whatever you're using. If you have a height and weight scenario, for example, you cannot trust those, that they're going to be accurate. Some of them are way off, as Doug and I found out. That'll maybe say that you could qualify for a standard, and it may be table 3 or 4 at best at that height and weight for that particular carrier. So use me for that. That's what I'm here for. Use those risk assessment questionnaires. Of the folks that are on now, it looked like we had close to 40 on there. Most of you guys use those, but use that little risk assessment questionnaire that I had. You'd be amazed how much time can be saved going with probably the wrong carrier initially, and then have to kind of start all over again, and just dial it down to do the best job for your clients. So use those things. That's what they're for, and that's what I'm here for. So I want to help you for that. Then also a couple of things really quickly, and one of the carrier that's coming up in a minute, North American, is one of the carriers that have this new cash out option on GULs. I know some of you are aware of it, some of you are not, but one of the concerns with using a GUL has been exit strategy. If somebody, the beneficiaries that they had chosen are no longer here, they passed on, or whatever, for whatever reason they wanted that policy, those that they wanted to leave it to are no longer there. Well, if there's no, of course they can leave it to somebody, but if there's nobody that they really cared about leaving it to that was important to them, they don't really have an equity position. And of course, we don't really talk about using, buying the policies like the old viaticals and things. I'm forgetting the term right now, but that's not something that you can talk about initially anyway. But there's cash out options on several of our carriers, North American that's coming up, and American National and Pacific Life, where in the 20th and 25th year, most of the time they can get back, if they exercise it right then, all the premiums they've paid in without paying that upcharge to get that advantage. So that's a tremendous thing. Call me, talk to me about that, just to have out there to show them. Usually there's a partial surrender in the 15th year. Those are great. And lastly, I'll leave you with this. So important when you're using a GUL that you go ahead and run it all the way out to 120. It's usually just a tiny amount of difference between age 100 and carrying it out to age 120. And as crazy as it sounds, more and more people are going to live past age 100. So you want to do that. My mother-in-law moved in with us about 6 years ago when she was 93 years old. She is now 99 years old. She thought she wouldn't be here very long after she moved in. Extremely healthy. Eyesight's going. That's why she moved in with us. But 99 years old, she said she wants to go right now, go home, be with the Lord. But she rides her stationary bike every day, about an hour, fast as lightning. I try to explain to her that, doing that is not helping her get to where she wants to be, but she does it anyway. So, but she's going to be here in all likelihood for several more years. So just an example of why that's important. And I'm glad that we have those products so that we can help people and they can, buy a death benefit basically. But appreciate you guys so much. Appreciate the attendance. And coming up now is Gary Proco with North American. Appreciate Gary, regional vice president with them, very knowledgeable. I have a relationship with North American that goes back almost right at 30 years with other agencies, and we were with them for a number of years where we were a top agency with them in the 90s. That's a carrier that has always been in play. And one of the things that's most important to me, there's relationships there that you can, there's been the consistency, but the integrity of the structure of their products are extremely important to me and should be to you. And especially if you're looking at IULs, that for me is the go-to carrier. So without taking any more time and to start on time, Gary, thank you so much for being with us.
Thank you, Mickey. No, it's a pleasure. I've looked forward to this all week. I know you and I've had different conversations, and I spoke to Reynold, and no, we're excited to be on today. I have my internal Charlotte Tharaldson on me, on here with me as well. But today, what we're going to do is we're going to give you a really good overview of our product portfolio and what makes it stand out. What are the competitive advantages? What are the differentiators that actually, from your perspective, provides the best solutions for your clients? And then we'll talk about from an underwriting perspective. Obviously, with the pandemic over the last 12 months, underwriting with many carriers has gone a little sideways or gone a little slow, or and so we're going to kind of give you an overview of, from our perspective, how our underwriting has done through this period and how we see it going forward. So we'll go ahead and get started. So let's start with the structure of the company. This is very unique in the industry. We're a privately owned ESOP company. And as you can see, we're 130 plus years old, top rated. Leadership has been in a position for many years. you know, even from an internal, I mean, from a regional wholesaling perspective, you know, I've been in the business 30 years. I've been with North American 11. My internal's been, we've been together for 11 years. You don't see too many regional teams that have been together as long as we have. And so it's actually benefited us with our partners and who we've worked with. And, you know, Mickey wanted me to mention this. We've never increased our COIs. And I know that's something that not every carrier can tout. We're very proud of that. That would be the absolute last thing we would possibly ever do. And so we've been able to stay true to that, you know, in our history. So we feel very strongly and feel good about that. The other thing is, if you look during the pandemic, and this is where one of the benefits of being privately held. Our president of our company said, he said, you know, when things are going well, he said, we're really good. But when things are not going well, that's when we're at our best. And we didn't pull products. We didn't reprice products. Our underwriting new business really didn't skip a beat. When we put everybody at home back in March of last year, we immediately outfitted everybody with the technology that they needed at home to process business. And so we've been able to stay the course. And that's one of the things, everybody loves our products and everybody loves what we've been able to do, you know, over the years. But the one thing we keep hearing about today, you know, I'm out on the road again for the first time in a year. And everybody's saying, man, he said, your new business, you guys are just processing like crazy. We do not get hung up with you guys. You know, I've got a carrier that won't mention the name, but they actually own some agencies. Those agencies that they own are actually coming to us because they're having trouble getting business processed. So new business right now couldn't be better as far as getting business through the pipeline. So let's take a look at kind of an overview of the product portfolio. Now, Advantage Term. Now, I can tell you during the pandemic, this product really took off, you know, because I think a lot of the permanent products, people were a little bit hesitant, but I think 1 in 4 people wanted to buy life insurance during the pandemic. You know, so we sold a lot of this Advantage Term, and there's reasons why we sell so much of this term, and it's really these 2 reasons that you see listed here. It's convertible, either full conversion or partial conversion to any product in the portfolio, and it also can be converted to a new policy, or it can be converted in an in-force policy. You still get the same commission, but from a consumer's perspective, it may make more sense to convert it into a current policy that they have with North American than it is to start a new policy. Living benefits is, you know, it's one of the best, if not the best price term that has full living benefits with no additional premium. You know, so it has the critical, the chronic, and the terminal. So you've got some of the best, if not the best, convertibility options in the industry, along with full living benefit package with no additional premium. So, and you'll see the chart here on the right, and you'll receive a copy of this. But this just shows you how long the period of conversion lasts within our term, Advantage Term. You have many years to do this. If you do it in the first 5 years, you convert in the first 5 years, the client gets the full living benefits with no additional underwriting for those living benefits. If they go 7 years, 10 years, 15 years, we're going to do a real quick, you know, review underwriting in order to determine if they get the living benefits or not. It's a really quick, you know, yes or no. But these 2 things, convertibility and living benefits, you just can't beat it on the term portfolios today. Custom guarantee. Mickey actually mentioned about our GUL. You know, this is for many years, this was actually the #1 GUL in the marketplace. I mean, as far as price, #1. It's still competitively priced. It's actually one of the few GULs that's still on the market. You know, some carriers have actually pulled their GULs. Some are getting ready to reprice. And we've been able to stay the course. We have not repriced this product during the pandemic. And this has what Mickey had mentioned, the return of premium. We call it PRE, or premium recovery endorsement. So at year 15, they get the 50% of the premiums paid. Years 20 and 25, they can get up to 100% with a maximum 50% of death benefit. Most carriers that have ROP, it's a maximum of 40% of the death benefit. But in most cases, when you illustrate it, they'll probably get most of the time 100% of their premiums back in those 2 years. One differentiator that no one else has is the guaranteed exchange privilege. This is contractual. And it's like having a term conversion. It's like having a conversion like you do on a term conversion on a permanent product. So someone buys a $500,000 GUL, they're 50 years, 45, 50 years old. They get out a few years, they're playing golf with a buddy, and his buddy says, well, I've got this IUL, I like this accumulation on this IUL. And so this guy comes back to his agent and says, well, I want this IUL. Well, with every other carrier, they're going to have to write a new app. With us, they can exchange all or part of that GUL into any of our accumulation IULs with no underwriting. So it's a contractual exchange privilege. So it's like having a conversion privilege on a permanent product, just changing the product, so that's very unique. And then it has the full living benefits. All of our products, except for a classic term, which I'm not going to spend a lot of time on this classic term. It's really just no frills, no convertibility, no living benefits. It's out there for people to see. Advantage term is our number one, but the living benefits are on all of our products. Protection Builder. Now, this is a product from a guaranteed perspective that I love. I mean, yes, we have the GUL. It's there for a reason. There's still a lot of agents and advisors that are selling the guaranteed GUL, but I would encourage you to take a look at the Protection Builder IUL. It's the same premium to guarantee. So if you rent a GUL custom guaranteed to 120, as Mickey was mentioning, if you ran this product to guarantee to 120, it's going to be the same premium. Okay, same premium. Here's the benefits versus the GUL. It has higher targets for you. From a consumer's perspective, it has cash value. So I'm paying the same premium I'll be paying on the GUL, but I'm actually accumulating cash. This product also has the PRE, just like the GUL, same 15, 20, and 25 year. So now the client's got two options here. Now they can only exercise the PRE in that 15, 20, and 25, but I could surrender the cash value anytime I want. So I have an option here. Or if I get out the year 25 and I look at my surrender value, I just want to get my money back, I could exercise the surrender value, pay whatever taxes may be due, and still come out better than if I exercise the PRE. So they have options. It gives them flexibility. Now, when we talk about the PRE, there's a presentation that I do. It's called Have Your Cake and Eat It Too. And it's just a sales idea for you. So when you're out there selling this, GUL or GIUL, guaranteed death benefit, you like the PRE, you like that return of premium, the client likes it, gives them that opt out, that exit strategy Mickey was talking about. But the downside of having that exit strategy on a single policy is what happens when they exercise the PRE. The policy's done. Policy ends. There's no more death benefit. They got their money back. Great. They may have exercised that with hesitation, knowing they were giving up something. So how many 70-year-olds really want to give up their death benefit, even though they really could use some of the cash? I would encourage you to write two policies. So if it's a $500,000 death benefit guarantee they want, sell them two 250s, just as an example. They get out the year 20, they want some of the cash back, they exercise the PRE on the one policy, get their money back, they still got the second policy. If they needed all the money, they could exercise the PRE on both of them. But when you have both policies like that, it gives the client some options. Maybe they want to buy a long-term care policy, so they exercise the PRE on one of them to pay up a long-term care policy. Maybe they need it for retirement, so they take whatever the cash they get back on the PRE on one policy, get into it, put into an income annuity. Or they want to keep some death benefit. They don't want to pay any additional premium. So they exercise the PRE on one to pay up the second one. That one's paid up, plus they probably walked away with cash at the same time. So it's just a different way to look at it, create that options and flexibility for the client so they're not forced with a decision at 70, 75. If I would like to have the cash, but I give up the death benefit. I really don't want to give up the death benefit. So I'm trying to make ends meet, but not taking the cash. It just puts them into where they have to make a decision, and you can actually make it very simple for them. Protect a death benefit. I could do a presentation on this alone. We're the only carrier that has protected death benefit, and it's basically an overloan protection, which is put in place on accumulation products to keep a policy from lapsing for overloans, creating a taxable event. Protected death benefit allows the client to decide how much death benefit do they want to make sure they have, so that enforce on the day that they pass away, along with taking money out. Because when you take money out of a guaranteed death benefit product, what happens to the guarantee? Well, on a protected death benefit, I got a $500,000 policy. I can say, I want to protect 250. We'll protect 250. You can take the cash out of the rest of it. The death benefit will never fall below 250,000. It's guaranteed. Nothing else like it in the industry today. This one I just want to touch on. This is really a hot product for us for the older ages. Clients have a lot of money in money market. They have a lot of money in CDs, not really earning any money. This is a IUL that has no premium load, so it has really early cash buildup. It has an internal rate of return of 5%. I mean, where do you find an internal rate of return on 5% anywhere? And this actually, you reposition some of their money into this. They get full living benefits. They get an internal rate of return of 5%. No surrender charges if they change their mind down the road and want to do something else with it. It's just better, better, and better than anything else out there as far as repositioning assets and getting money out of these low interest rate environments. And it gives you something new to talk about with the older clients that have these assets. Just a great conversation to have. The next one is just our long-term accumulation IUL. When you run across that 40, 55-year-old that wants tax diversification, some people call it LERP, some people call it, supplemental retirement. It's called a lot of different things. The key is you want to pay less taxes in retirement and distribution of the retirement assets. This is the product to go to. This product in the 30, 35, 40, 45, 50, and 55-year-old right now is showing the max accumulation and max distribution in all IULs in the marketplace today. Mickey talked about if he was recommending an IUL, he would recommend North American. I don't blame you, Mickey. We're showing up #1 everywhere, so I would certainly give us a shot and take a look at our Builder Plus IUL. Something we just added to our IUL portfolio. Hopefully everybody's familiar with Fidelity. We just added a Fidelity Volatility Index with a 135% participation rate. We took away the account value charge, which is why we're ranked #1 in distribution on IULs today, is because of this fund right here. I would encourage you to go to gofidelity.com, visit that link. You'll learn all you need to know. You can use the Fidelity on the Protection Builder IUL, the Guaranteed Death Benefit IUL I mentioned, the Smart Builder, and the Builder Plus are all available. So I would encourage you to explore that. We have actually a big meeting web session next week where we got Fidelity speaking. If you're interested in participating in that, let Mickey know. We'll make sure you get the registration so you can participate in that as well. This is just one example. I could post about 30 up here where we're ranked #1 in max distribution. Just thought I would show off a little bit. Living benefits. Key things here are term living benefits. Like most carriers, the underwriting is done at the time of claim. They run, go out and gather APSs, run MIB, determine the severity of the impairment before they determine what level of acceleration you can get. Our term has underwriting at claim. So if you've got the advanced term living benefits, claim has, cancer, heart attack, or more of a chronic, we'll do the underwriting on that, determine how much. On our permanent products, we're one of the handful of carriers. Last I heard, there was 2 carriers that actually have no underwriting at the time of claim. So the GUL and GIUL that we talked about in the guarantee, they need to file a claim. We will not request APSs. We will not run an MIB. We just need a doctor to certify. Once the doctor certifies, we accelerate. Very quickly, very consistent, very predictable. Underwriting, just to kind of give you, during the COVID, what we've done is put some restrictions in. And I heard someone mention earlier about blood work, 6 months to 12 months. Well, I can tell you ours is 24 months. So we're talking about almost 2 years that we'll use a previous, carrier's exams and labs in order to consider the underwriting. You'll see here the age requirements, restrictions we've got. The only thing we've really postponed is 80 and up. We go up to 79. You can see there standard, and it's different table ratings at the current time. We don't know how long this is going to last. We had a call with our chief underwriter with a projected or expected new wave. He has no idea. There's no way to determine how long these requirements are going to be in place, but we do understand that we have some of the most favorable COVID restrictions today. Underwriting, right away, our accelerated underwriting. You'll see here ages 18 to 50, we go up to 2 million. Ages 51 to 60, $500,000. We get asked all the time, the 51 to 60, are we looking to increase that one? I can tell you that it's constantly being looked at to see if we can actually increase the amount on those. We did increase 18 to 50 from 1 million to 2 million not too long ago. And it's really made a big difference. We'll show you some stats here shortly. Upsell offers. If you submit a $250,000 on a client, we do the underwriting, but they would be eligible at $1 million with no additional requirements. We're going to send you an upsell offer saying you got 48 hours to have a conversation with the client. You apply for 250, Mr. or Mrs. Client. You're actually eligible up to $1 million. Do you want to take advantage of that? Get another 250 or go all the way up to $1 million. So we're giving you that option, and you would be notified on that. Nearly 7 out of 10 apps are coming in electronically. We do have all of our products on e-delivery as well today. 12 days is the average turnaround time for the accelerated underwriting, and 52% of the apps that are coming in up to age 60 are qualifying for the right-of-way. It's one of the highest in the industry of accelerated underwriting. Over 50% now. Our goal is to get to 60%. They come in, get accelerated, and move the process very quickly. So this is our contact information. More than happy to help any of you. If you would like to, Mickey, if you'd like to do that Cake and Eat It Too web session where I kind of go through the GIUL and the GUL and how to structure that to give the client the most flexibility, more than happy to schedule that sometime. To see how that would work. How do you submit that? But we're excited. We know with our new business and underwriting right now going so smoothly, product portfolio that we have, we're actually sitting in a very good place right now.
Absolutely.
Gary, Gray Strickland had a question. Gray, go ahead.
Yes, sir, Gary. Thank you for your time. Is the Fidelity Index you referenced available only on new issue policies? Or is it available on the older series, builder IULs, et cetera?
Great question, Gray. Right now, it's only available on the Builder Plus 2, which is the one we've been selling. Char, how long have we had the Builder Plus 2? I can't remember how long.
Yeah, the Builder Plus 2 we've had for about a good year, maybe a little over a year. So if you sold a Builder Plus 2 in the last year, you can choose the Fidelity Index there. If you have a Builder Plus 1 or a Builder 8, 7, 6, etc., it's not yet available there. We, because 7702 has kind of taken some of our time and attention for our products, we will be revisiting what additional previous versions we can offer it on. But right now it's any new Builder Plus 2 or in-force Builder Plus 2, any protection builder IULs that are new or in force, and any smart builders new or in force.
And Gray, we do expect that we're looking at, we'd already started it, but then the 7702 guidelines changed on us. And so we had to spend all the product committee and actuaries on getting that up to date for the regulation. So that kind of pushed that on hold, but the actuary has told us their objective is to go one version at a time and keep going back and see how far that they can actually get that added to it.
Thank you.
Any other questions?
I've got a question, Gary. What is your point of view, the 529 versus the Smart Builder IUL for educational purposes?
Well, we don't see the Smart Builder used for education that often. We see the Builder Plus used for education more. You know, life insurance versus 529. 529 obviously has the limitation, it has to be used for education, right? Whereas the life insurance does not. We all like to believe that our children will go to college and graduate. It doesn't always happen that way. I actually have 2 of those. And so if I would have had 529s on both of them, I would have been penalized by using that money for anything other than the education. So not the flexibility that the cash value life insurance would have had for me. You know, the smart builder with the no surrender charges. I know historically in the years past that product was used sometimes for college planning, but Builder Plus seems the one that most people use to get the most over a period of time as far as distribution. But 529 for me, it just talks about some of the restrictions really that are around the pop. Great strategy out there, but just has some restrictions to it.
Very good.
Okay. And second question to that, can we sort of overfund this smart builder?
Yes, absolutely. And it'll take a single premium up to $1 million, and we see those all day long because people are repositioning these low interest bearing, accounts over into something where they're getting a lot better return, full living benefits, no surrender charges, and tax-free death benefit.
Great. Thank you, Gary. Thank you, Shar. Appreciate you guys and the presentation. Thank you for what you do.
Thank you, guys. Thank you for the opportunity to speak.
Very good. Okay, so our last but not least, our last presenter, Chris Simpson. Many of you met Chris a couple of years ago at Texas Star, and when I grow up, I want to have this guy's voice. He's got the perfect voice for presentations such as this, but he heads up the annuity division of the iGroup that we're involved with. Many of you, have worked closely with Andy, with Alfredo, Joel out in Fairfax. Chris actually is in the Austin area, so I'm not sure how long you've been in Texas, Chris, but I know you got here as quick as you could. But anyway, I want to turn the program over to Chris Simpson. Take it and run with it, my friend.
Well, thanks a lot, Reynold. I appreciate that introduction. And I'm hoping you can hear me okay and you can see my screen as well. Let me know if that's the case.
Yes, we're good.
All right, fantastic. Yeah, I went through the names here on this call, and I see a lot of folks that I did meet at the Texas Star a couple of years ago. Believe it or not, that's one of the last meetings I did. I went there, I went to Michigan, Connecticut, and then COVID kind of happened. So it's amazing how things have changed. But yeah, like Reynolds said, I'm just in Austin, so that can leave some opportunity for us to meet and everything if we need to go over anything on the annuity side, or if you just find yourself in the area, I'm happy to do that as well. But like Reynolds said, I just wanted to kind of dive in, talk about annuities a little bit. I think I'm the lone gun here as far as annuities go. I think I'm really the only annuity presentation, if I'm thinking correctly. And, that puts a little bit of pressure on me, but I also want to make sure we cover a lot of information here. As Reynolds said, I work with the iGroup. We have a lot of different annuity carriers, tools, systems, things to help you have better annuity conversations. And from talking to Reynolds a bit before this call, he mentioned that we have really a mixed bag of agents in here. Some of you may have done some annuities in the past. Some of you may have done no annuities whatsoever. So I just want to make sure, we kind of tailor this to really talk about some of the things we can do and really where the annuity market is right now. And let's kind of dive into that real fast. I want to talk about some numbers in 2020 in review. I'm sure everyone who's done these presentations with you guys has talked about 2020 just obviously being a wild year. We saw some pretty amazing things. I want to talk about this real fast. Let's talk about some specific numbers. 34%. The S&P 500 dropped 34% from its high in a 5-week span in the first quarter of 2020. I'm really just going to read these slides here. That wiped out 3 years worth of gains in the blink of an eye. That left a lot of people wishing that they had a second chance to protect their assets, right? That's the beauty of these fixed index annuities. That's the beauty of these annuity products. You can't lose your money once you put them in there. You can only see gains. You're not going to lose your money with these products. You have that principal protection. You had a lot of people that I spoke to who didn't pull the trigger on an annuity first quarter of 2020, wishing they had done so. That's the opportunity that we are giving folks. Let's talk about another number, 126. It only took 126 days for the S&P 500 to journey from a record high to a bear market and then back again to another record high. Now, these numbers are a little bit older. I was debating on whether I wanted to show them to you, but I'll pull this out for you. This is through December 8th of 2020. The S&P had gained 65% from its March low, more than 14% year to date. So again, 126 days to go from that record high to a low to another record high. It was a pretty astounding year if you were paying attention to the stock market. A third number here, 1,500. 1,500 on average, going back to 1928, it has taken the S&P 500 more than 1,500 trading days, nearly 6 full years for the index to return to record levels after a bear market. It takes that long. Think about 2008. Many of you were probably in the business in 2008. You saw the market crash. It took years before we saw a recovery happen. Here, it took 126 days to go from highs to lows to highs again. It was really an astounding year when you put it like that. And look at what's happening right now. I just took this screenshot from CNBC this morning. We're at all-time highs again, folks. Remember, for these fixed index annuity products, you don't need a securities license for this, but it is good to have a nice understanding of what's going on in the marketplace. Your clients don't have to be financially savvy. They don't have to be super savvy in the stock market to understand the benefits of what these products can do for them. But what you can show them is that we are at all-time highs once again. The market had a massive jump this morning because of those stimulus checks that were issued in March. Consumer spending is up, blowout economic data, strong bank earnings. You are seeing a lot of highs right now. And the S&P is just going wild over 4,100 as of right now. Folks, the reason I bring up these numbers, the reason I'm really showing all of this is because this is our opportunity for a do-over. As agents and advisors on this call right now, this is our opportunity for a do-over. Every investor has been given a second chance to add protection to their portfolios at or near all-time highs. Right now, we are at all-time highs. If you know a client, if you know somebody that is looking to retire soon, has retirement on the horizon, has that money sitting in a 401k, has that money sitting in an IRA, there's no better time than right now to pull that money out, put it in a product like a fixed index annuity, that can offer principal protection, protect their money, and still get some earnings off of the S&P 500, off of these different indexes without any risk of market loss. Folks, it's a great time to do that. Like I said, don't let your clients waste this opportunity. How often do we get to see that? And for you, all you advisors on the call, this is an opportunity for an outstanding conversation. Use those numbers I just talked about. I can send these slides back over to you. That is real data. The market dropped 34%, went right back to all-time highs. Are you concerned about that happening again? Are you concerned about what's going to happen after this little rush of stimulus funding goes into effect? What is going to happen in the future? It's a great time to look at this for a do-over. So with that, folks, I want to talk about 2020 just in a quick review real fast. Obviously, we had a ton of volatility. That was wild. We had a decade's worth of volatility compacted into a year last year. We all got used to doing Zoom sales. We all got used to talking to folks on Zoom. We're talking on Zoom right now. And believe it or not, this is probably the norm for a little while. And it might be the norm in the minds of a lot of your clients as well. You know, we did see some product suspensions on the annuity side. I know you just had an IUL presentation there by North American. Gary and Shar always do such a great job, but we've seen some product suspensions or some changes to caps and rates on the IUL side. You're going to see that on the annuity side too. Some fixed index products have gone away. Some of them have just been put on a temporary halt. Some of them with income riders, those guaranteed roll-ups, those products were suspended with some carriers. Some of them still aren't back, believe it or not. So that was something that we saw in 2020. You did see some rate drops last year, but the good news is we're seeing a lot of rate increases right now. We have some MYGAs over 3%, over 3.1%. Think about the conversations you can have with your clients. Think about if they go to bankrate.com and you try to look at CD rates at your local banks. I know most of you are on mute, but think about what a CD rate might be right now. 1%, 1.2% for 3 to 5 years. You have products available to you that can offer your clients 3.1% over 5 or 6 years with certain products. It's an easy conversation if your clients have money sitting in CDs or just sitting in cash right now. You know, 2020 brought uncertainty as well. We didn't know the market was going to shoot back up. We didn't know how low it could go. It created buying opportunities for those investors, but who knew if it was going to pop back up? It's never done that before. I just showed you guys the comparison, 126 days to go from a low back to a high. Normally that takes 1,500 days. So people had reason to be uncertain about what would happen. One big thing from 2020 though, and maybe you guys saw this too. I know we mostly have life insurance salespeople on this call, but a lot of clients wanted guarantees. I saw term insurance sales go up versus IUL sales versus whole life sales. Term insurance sales increased while those went down. In the annuity world, it was kind of similar. Multi-year guarantees increase. Fixed rate deferred annuity sales were up 47% when you compare the 2 third quarters. You didn't see folks looking for index products. They wanted to know, can I get a guaranteed 2.5% over 3 years? Can I get a guaranteed 3% every year for 5 years? That was something that was very popular last year. And again, while we saw rate drops, we are seeing those rates start to come back and increase a little bit here as the 10-year Treasury note, as the bond market is changing here around us. So, you know, I wanted to throw this slide in too. I know we're already in April, but will 2021 be a volatile year, folks? It's a question that I'm getting a lot. And, you know, there's a lot of reason to think it will be. Right now, I just showed you, we're at all-time highs again in the marketplace, but will that last? How long will that last? Is it actual sustainable growth that we're seeing right now? Nobody knows. We don't have that crystal ball. But what we do know is we have a new administration. We have new regulations that are always coming into play. We don't know what this administration will do right now. We don't know what's going to change, but that could create a lot of that volatility. And again, these are things you can talk about with clients as you're discussing what they have in their 401ks, IRAs, sitting with cash on the sidelines and things like that. You know, will we see new shutdowns? I really don't think so at this point. We see a lot of states opening up. Texas was obviously a fast state to open up. If you're doing some sales across the country, I'm sure we have a mixture of folks on this call in different areas. Will we see new shutdowns in certain areas that could cause a little bit of pain in those states that don't open up? It's very possible. And how about a drop in the market because stocks are historically expensive, folks? I just saw an article on CNBC that said Charles Schwab added 3.2 million new retail investors in the first quarter of this year. More people are playing games with the stock market. More people are jumping in with small amounts of money through apps like Robinhood. They're jumping into the market on Schwab. They're jumping in the market on Fidelity with small amounts. You saw the hype around GameStop and stocks like that recently because a lot of folks are just trying to raise the prices. Think about companies like Tesla as well. Tesla, their market cap, they're worth more than Ford, GM, and Toyota combined, yet they don't sell nearly as many cars as any of those companies. Folks, think about that for a minute. Stocks are historically expensive. Could we see a drop in the market just because they really don't make sense? Absolutely. That's absolutely possible. And that's, again, a conversation that you can have with your clients as well. So what's new in 2020? I mentioned new regulations. Folks, if you're doing annuities a lot, if you're on this call and that is a cornerstone of your business, there are new regulations to be aware of. The best interest standard, for example, is one of them. You have a lot of states adopting this. You have more states very interested in adopting this, including Texas. So it's something to pay attention to. Just to give you the real quick and narrow about the best interest standard, This is a rule that simply says you must be acting in the best interest of your clients when discussing annuities, fixed index annuities. What it really means is there's a couple new pages added to every application. And they really want clients to sign off that you are receiving a commission for the business that you're doing. You don't have to tell them what your commission is, but they do have to sign off on a page that says you receive a commission on the business that you're doing with them on the product that you're discussing. And then they want to make sure you are record keeping well too. So again, if you show your clients 5 different products and you present different illustrations or a spreadsheet, I would save that information. I would store that in a CRM or even just a file cabinet to make sure you offered more than just one product and the decision you arrived to was in the best interest of the client. Guys, that's about it. That's really all that they're really looking to do. I know Ohio added a free training, kind of think like AML training, that you can do for the best interest standard. Other states are probably going to pick that up. And I do know that Texas is interested in adopting this. So that might be something in 2022 to pay attention to for Texas. And again, that's just a simple call to us, simple call to Reynolds. If you do have an annuity you're working on, to make sure your training is up to date. Folks, and with that, I want to dive into something real simple here, because I was talking to Reynolds a little bit about who's on this call and what we need to be presenting. And I want to make sure that we know certain things about these products that just make it easy in any conversation. If you have a mortgage lead and you're going in to talk about life insurance, if you do Medicare and you're talking about Medicare, well, you can't really talk about another sale in a Medicare sale, but let's say on an annual review or on another call. I want to make sure all of you know the things to ask and the things about fixed annuities that are going to be very pertinent for you in any conversation with any client. So I created this 5, 4, 3, 2, 1 method. And it kind of goes like this: 5 benefits to fixed annuities. I want to make sure all of you know 5 simple benefits to these products and why they can be so valuable for your clients. The first one's liquidity. And I know you get a lot of folks who say you have no access to your money, you have very little access to your money with annuities, but the truth is they're very RMD friendly. You have usually 10% free withdrawals available with most fixed index annuities. Some of them are 5%, some are 10, some are 15. You have a lot of liquidity available. We have some products that roll up liquidity up to 50% access. We have some products that have full return of premium. If your client's unhappy with the annuity, they can get all of their money back. No questions asked, no surrender charge, anything like that. So if you're running into the roadblock of liquidity, folks, liquidity is available with so many of these products. Growth potential. You know, with these fixed index annuities, you have a ton of growth potential. I'm not going to name carriers or indexes or anything like that, but we're getting a lot of the numbers back from growth over the past year from carriers. I've had conversations with an agent yesterday. He bought one for his mother. It was a 14-year contract with a 10% bonus. On top of that 10%, she got 9.67% returns on her fixed index annuity. Guys, no downside risk, a 10% premium bonus, and a 9.67% return. That is really impressive. Again, no downside risk. I've been looking at a lot of products, and you know, even some of the ones that don't have the highest par rates, we're still getting clients 5.5 to 6.5% returns with no downside market risk. That's the type of growth potential that is real, that we can show for clients that they can look to in the future. Principal security, guys, this is probably my favorite feature of this. Again, the numbers I presented right away were meant to talk about principal security. Your clients have their money sitting in 401ks, IRAs, maybe brokerage accounts. The market's at all-time highs right now. Think about it. They're at all-time highs right now. If they're nearing retirement, thinking about retirement, concerned with where the market's headed, they can put that money in a fixed annuity, fixed index annuity, protect that principal. It will never go below that, and they can still earn outstanding growth potential on their money on top of that. It's a beautiful feature. Income, of course, annuities, they're the only product that you can annuitize for the rest of your life based on your lifespan. Only product out there available. Social Security is kind of the the OG annuity if you want to, but really income entirely unique to these products. Get that lifetime income for your clients that is guaranteed, stabilize their retirement, help them retire confidently. That's what you're looking to do. And of course, tax deferral, that benefit of tax deferral with these products. Annuities earn interest on a tax deferred basis, guys, and that just means interest on top of interest on top of interest. You push back that tax bill, you take distributions when your clients are no longer working at a lower tax bracket, reduces that tax bill. That's 5 benefits of fixed annuities. There's a lot of benefits. I didn't talk about annual reset. I didn't talk about a lot of the big features of these products or even the long-term care features that are available. But that's something you should know, those 5 benefits anytime that annuity conversation starts. So again, this is the 5, 4, 3, 2, 1 method. So I did 5 benefits. Here's 4 questions to ask in every appointment. These are super simple. You know, are you happy with the current rate of returns on CDs, savings, money market accounts? Folks, I just talked about bankrate.com. I talked about CD rates in your area. Go to bankrate.com, punch in your zip code, punch in the zip code of any client you go to see. Talk to them about what their CD rates are like in that area. We have annuities that'll beat them. We have annuities that are 2 years in length, 5 years. I have fully liquid annuities that are available. I have a new product that goes up to age 95 as well. We have anything that can fit any client in any scenario. You just let me know. Are you concerned about outliving your retirement income? Do you want your income in retirement to be guaranteed for the rest of your life? Remember, an annuity is the only product that can guarantee a lifetime income so your clients don't outlive their money. And how would you like to protect your retirement money from market downturns today? Again, that principal protection, market's at an all-time high. Let's protect that money that they've earned, that they've been saving for years here. The 3 products, let's keep it very simple. Again, Reynolds told me we have a lot of folks on here who have not done annuity sales. Don't focus on it too much. Guys, it's really pretty simple. In fixed annuities, index, traditional, SPIA. You have your fixed index products. You have your traditional products that are like your multi-year guarantees, like your CDs. And then you have your SPIA products that pay an income right away. It really is that simple. And then you have the 2 needs. And I bring this up because as I talk to all of you, I see a lot of names on here that I've talked to before. It's really simple. You have 3 products, you have 2 different needs. What does your client need to do with this money? Do they need an income or do they need accumulation? And if they need an income, do they need an income now or do they need an income later? Let's narrow down that product your client's looking for. I do get the phone call that's pretty funny sometimes. Like, Chris, I got a 62-year-old with $100,000. Okay, that's fantastic. You know, it's a start for us, but let's find out what their need is. What do they need to do? Do they want an income from that $100,000 now? Do they want it later? Or do they just want to park that money? The client I gave you an example on earlier, who got 19% back from a 10% bonus and 9.67% returns, that was an 85-year-old client. That client just wanted to put that money away for wealth transfer purposes. She didn't want to touch it. She had $800,000. She put it in a product that got a 10% bonus right out of the gate. Her goal wasn't income. She just wanted to park it, accumulate funds, pass it on to the next generation. So when I get that phone call that I have an 80-year-old who wants to put $800,000 somewhere, what's the need? Income or accumulation? If it's accumulation, let's find a great product that's going to grow, not charge her any fees, and is going to be protected. And remember, a big benefit of annuities, you can name a beneficiary just like life insurance. You avoid probate. It's an outstanding feature. And great for those clients who are in their 80s who can't get or qualify for life insurance as well. I go off on tangents sometimes, guys. So with that being said, there's one solution, guys, fixed annuities. That's the 5, 4, 3, 2, 1 method. I have a client-facing presentation built like that as well. So that's more of an agent-facing one. I have a client-facing one. That can be something, if you request it, I'm happy to send that over to you. A nice, simple way to just break down annuities for your clients. So what can you do today? You know, we're wrapping this up here. What can you do today as agents on this call? I just marked this down to 3 things here. Follow up with your clients that you already have. A lot of you on this call have a book of clients that you've probably never discussed an annuity with before. Folks, annuities are an outstanding annual review. They really are. If you're reviewing life insurance, if you're talking Medicare with them, if you're securities licensed on this call and having that conversation, you can allocate money to annuities to protect some of that money. And trust me, a lot of clients, annuities go from age 0 to age 85, some to age 90, some to 95. There's always a spot for folks with these products. I don't recommend annuities all the time for a 20-year-old, but there are situations where they've inherited money where an annuity has fit. So you can consider that as well. Follow up with your clients. They are an outstanding annual review. I said, ask the right questions. I threw 4 questions out earlier, but I have this needs assessment that I'm going to send over to Reynolds that all of you need to be using. If you sell annuities, this kind of looks like a suitability worksheet in every annuity application. That's because I kind of stole it from a combination of different carriers. Excuse me. This is a great way to find out what your clients have in CDs, mutual funds, money market accounts, what they have sitting in life insurance cash values, things like that. Money that can be rolled into annuities, or at least start the conversation. And I would recommend in any appointment you're doing, get some of this information down, take that little financial profile assessment on the second page there, find out as much as you can about your clients. Annuity conversations don't happen right away. Remember, they're not doing $50 a month EFTs. They're transferring $100,000 to $300,000 sometimes. So it's great to get a fact finder and continue to follow up with those clients. And then I'll mention this, offer multi-benefit solutions. When I did our 5-4-3-2-1 method with the 5 benefits, I didn't mention the LTC features. But folks, there's a lot of long-term care features available now with annuities. If your client can't qualify for long-term care, we have products that they can qualify for. Granted, they're not full long-term care benefits, but it's something. It's something that can help them out. Now, I was talking to a client who's basically living off of $500,000 using the 4% rule from his investment account. And he's pretty confident he can continue to do that. But the problem is, what happens if his health deteriorates? You know, 5% on $500,000, he's not living large by any means. But what happens if the market takes a massive dip? What happens if he has a heart attack and he has hospital bills to pay? He's not working right now. An annuity can offer living benefits to them as well that will pay double the income if you can't complete 2 out of 6 ADLs, and will continue that income for life as well. Folks, there's a lot of really nice long-term care features. If you haven't been paying attention to annuities for a while, I would recommend just taking a look at some of those features. Creates another conversation, another layer of benefits that you're adding for folks. And how can we help, folks? I'm putting our number up here. We can help in a lot of ways. You know, I've talked to many of you in the past. I've been working with Reynolds probably 5 or 6 years now. We've been working pretty closely. You know, we have a really excellent back office. We have some guys with a ton of experience on the annuity side. If you don't reach me, you can talk to Daryl Mullins, Earl Reynolds. Frankie can help your licensing to make sure everything's good to go. Reynolds mentioned Joelle earlier as well. But this phone number here is a one-stop phone number for case design, product questions, advanced annuity sales. You know, if you have a client and you just don't know how to get started, let's use those methods I talked about. There's 3 products, there's 2 needs for your client. Let's break it down from there and find out what's going to be the best benefit for them. Folks, that phone number is right on your screen. Reynolds, I was really keeping it kind of short there. I hope that was what we were looking for. That's think, perfect. Again, I was the lone gun here for annuities, so I wanted to present really a well-rounded bulk of information there.
Yeah, great job. Any quick questions here at the end for Chris? Okay, thank you, Chris. Appreciate it very much. And I just want to take a minute and just say a couple of things real quick, and then I'll let Mickey close us out. But just want to say once again, thanks for everybody allocating the time to be a part of this this morning. And as I look at some of the faces, and if you're not on the screen, I see the names. Some of us go back maybe 30 years or longer in having done business together. And I was thinking about all the lives that we have impacted, that you all have impacted with the great service that you've done when it comes to life insurance and financial service products. Some of you in the health insurance side and ancillary products, but you know, all of this continues on long after we're here for the families, and that's what it's done for. And just hats off as I think about the impact, the tremendous financial impact that you all have had on the lives of your clients. And just kudos, thank you, and thank you for your business. Appreciate the friendship. And Mickey, I'll let you close us out, and then everyone have a great rest of their day. Go ahead, Mickey.
Okay. Listen, I want to thank all of you so much for investing the time that you did this morning. I hope you felt like it was productive. I want you to know, Reynold and I appreciate everybody very, very much. And to kind of build on something that Reynold said, just as a reminder, you know, one of the things that I love the most about the life insurance industry is if we do it right, we can have the confidence that they have what they think they have. So many of the products that are available out there, and some of you, you know, the frustration with it, they may have, it may be health insurance, there's a claim that's not paid that they thought would have been covered. You know, with life insurance done the right way, you can be confident it's going to do what you told your clients it's going to do. And we're here to help you in any way that we can. We appreciate you so much. There's been some things that we've touched on this morning, product niches and opportunities with underwriting, et cetera, that may be new to you. Give me a call. Let's talk about them and see how we can help you guys further. And one of the agents already asked me for a risk assessment questionnaire. And I know as long as we've been working together, sometimes some of you don't have it. Let me know if you need that. And again, that's that little form. Doesn't ask if they've ever had a hangnail, but it just gives us enough to know maybe 80–90% of the time which direction to go, what carrier and what class to quote. Thank you again so very much. Hope you guys have a wonderful rest of the day.
Great to see everyone. Have a great day.